Hi everyone, it's Evan here from the Trade Risk on Friday, April 7th, here with a weekend market recap video. We're going to cover all of the major markets, the current market environment, may skip the sector analysis, not much has changed there, and then we'll get into some individual high beta names at the end of the video. So I hope you're doing well out there. Let's jump into the action. S&P 500 SPY ETF finished lower just slightly here on Friday, down 27 cents. That's minus 0.11%. A very dull day to sort of end the week, and it's been a pretty dull week, all things considered. We've had basically every single day this week close within 40-50 cent range of the past day here in the SPY ETF. And if we go to the weekly chart, you can see again just down slightly on the week, minus 0.24%. And the story really goes for this week is we tried to make that push higher. We tried to get that follow through move higher, and we failed. And again, nothing wrong. We didn't get follow through to the downside. We just failed that upper level momentum. We failed to break out above this trend line right here. So the way I sort of still look at this market here was if we were to make 2 points, there's really 2 days that shaped the last couple of weeks of action. This is the first one. So right here on the 27th, if you remember, we had that big gap lower and bulls just stepped in right away. There was no follow through selling pressure at this point on the open. We reversed. We closed near the highs. We saw follow through. We continued with follow through, moved sideways. And then this day right here is the next real day to take notice, where we had the inside day set up for us on Tuesday. We had the gap higher. We had the intraday strength, and then we had the reversal and close near the lows. So I think these are the two interesting days to have on our radar. Those are the last sort of significant turning points here in the market. And now we're just moving sideways, very tight range, and we're in between this downtrend line that's extending from the all-time highs and this horizontal line, which is acting as support right now, right about 234.50 to 235. If you go to the cash market, maybe a little bit cleaner here still, this 23.50 to 23.55 level, that is our upper level support. So that's what we're going to be paying attention to heading into next week. The ranges here are pretty compressed. Price action is dull. It's moved sideways 5 days in a row. So we're waiting to see which way this market's going to tip its hand. Is it going to make another attempt higher? Does this next move up actually works and follow through to the upside, unlike Wednesday? Or are we in fact going to sort of roll over here and come back down and retest these lows and continue sort of this consolidation and these in this series of lower highs that we have in place right now? So those are sort of the high level points to pay attention to heading into next week. Again, on that weekly time frame, you can see just more sideways consolidation. Price action is dull, no momentum. From a breadth perspective, if we look at some market internal metrics, we put up a post today just outlining one indicator there. That is the cumulative advanced decline line. That is at all-time highs right now. That is leading the market higher as the market consolidates. That's generally a constructive, and that is clearly a constructive indicator. It's not the only indicator, right? There are other forces here that we need to pay attention to, but that is certainly a strong point in sort of the bull thesis right now. So that is the S&P 500. If we go to the IWM, you can see here very similar, right? Kind of certainly a wider range week for sure, and certainly more underperformance, down 1.43% on the week. But you can see it's still holding right where it needs to. It's holding this 134 line. We still haven't got a close below there. It's a very high stakes line at this point, given the fact that we've consolidated there for over 3 months. So it's something that I think multiple time frame participants are going to be watching and paying attention to and will act on if we start to get a meaningful close below there. But until it happens, we are still just kind of in the same story here of moving sideways and kind of making everybody uncomfortable, shorts and longs in this range. That's that's sort of the same story that we have there. So key levels, very clear to pay attention to there. And the NASDAQ 100 just extremely dull here into the end of the week. I mean, look at these 2 consecutive closes, basically back-to-back, very narrow range, sort of indecisive days. And again, closing just generally at the same level here for the past 5 days, holding up the best, outperforming relative to the other major averages, still holding, just barely lost that 8 period, but still above a 20 period rising moving average on the daily chart. Very constructive action there still in the Qs. So that's the overall landscape. Let's move into some of the other major markets here. TLT tried to resolve higher here on Friday, and you can see it failed. It stuck its head above this 122 level, trying to break to new multi-month highs, and there was just not enough strength there. We ended up getting a very bearish reversal on the day, closing near the lows, still not violating any support, right? We're still consolidating in this upper range here, so not too much has changed from a structural standpoint, but we did fail to break out on that little, sort of a little micro sell signal on the day. So we'll see if TLT gets follow through lower. For now, it's all speculation. We'll have to see if that actually happens. GLD, again, another failed sort of breakout here, did manage to hold green on the day, and you can see battling at a pretty interesting spot here, this trend line that extends down from the 2016 highs in GLD. That's what it's dealing with right now. It's trying to resolve this little multi-week consolidation higher. It had a nice gap open, failed, and closed on the lows. Nice uptick in volume here. From a trend perspective, nothing changed, right? We're still holding above this 118 and a quarter, these lows here from the past few weeks. I think that's a good line in the sand to use. For now, the momentum has stalled, but we'll have to see if the bulls can stabilize us into next week. Silver, a little more pessimistic here. I mean, this is clearly, we talked about this level here, this trend line that's extending from the November highs, and this is definitely getting some significance. This is a much more sort of meaningful bearish engulfing bar here on SLV, coming back into this open gap. Once again, 8 and 20, they are rising. We're closing below the 8, still above the 20 period. So the short-term trend here still arguably higher, but this certainly puts a little bit of pause here in this upper level momentum. Now we just really want to see us get back above 1740 for that renewed strength or some type of higher low or some type of sideways base to kind of fill itself in for SLV. So those are the metals. If we go to oil, complete opposite here. This is getting nice follow through here towards the end of the week. And in fact, if we go to the weekly chart, we can see we had a 3% up week. We had a 5.5% up week last week. So the bulls, in very short order, almost as quick as we came crashing down, have now retraced more than 60, almost 70% of this breakdown here from March. So very constructive action in USO. If we were to zoom out, you can see here's the bigger holding pattern that we're still in. Bulls defended this $10 level. Let's see how high they can bring us to the upside to retest this breakdown zone. And for now, the 8 and 20 period just curled back up. So plenty of momentum there in USO. It's tough to chase, but short-term momentum continues higher. And for natural gas, we can see we're still rising in this channel here. It's pretty steep. Finished lower on Friday, down minus 1.15%, but still up 2% on the week. So again, this channel continues intact, 8 and 20, still below price, supporting this trend higher. All looks good there in natural gas in the short term. So those are some of the key markets. Actually, let's take a look at the dollar real quick, and seeing continued strength here into the end of the week, finished up almost 1%. And you can see if we zoom out here, you can see we're getting closer to this trend line from January of 2017, really late December, extending from those highs here, coming back up to this zone, some previous supply in here. So it'll be interesting to see how much more strength the dollar can continue here in the short term. Something to pay attention to, though, as it comes into these old highs and this downtrend line from the past few months. So with that, let's get into just a couple of sectors I'll still point out here, because again, I don't think really much has changed since Wednesday's update. You can go back and watch our update on Wednesday. We went a little more in detail on these sectors, but materials staying pretty resilient here, holding up, still clearly below a fairly significant resistance level, is 5280 general area, but it's holding up above the 8 and 20 period, and it's trying to hold firm here. So something to pay attention to. Maybe this is the new sort of sector here that starts to emerge as a leadership group going into next week or the next couple of weeks. So XLB has my attention. XLV, I'm still paying attention here as well. This obviously had a really nice kind of brilliant run through February and March. It's pulled back pretty tightly now in the sideways range. So I'm still watching this resolve here along with some of those individual stocks in that sector. And then finally, XLF again, moving back into this old support level around $23, paying attention to this, underperforming on a relative basis, and just keeping an eye on financials. If it wants to come back down and retest this $23, can the bulls hold yet again? And is this volume something to be concerning, this uptick in selling volume over the past few weeks? So those are the three sort of primary sectors maybe to pay attention to. Let's get into some individual stocks that we haven't covered in a little while. Some of these do have earnings coming up, so I know Netflix, I think, is in a couple of weeks, the 17th, if I have my dates correct. So that is upcoming pretty soon. But you can see still trading just off of all-time highs here in this kind of sideways but just slightly tilted higher channel, and again with earnings coming up, still have this open gap down here around 135, so it's holding up. Maybe you can still continue to sort of play the ranges here. If we go to the weekly time frame, you can see still very healthy action here above a rising 8 and 20. So that's Netflix. Earnings coming up, sellers in control here just in the very short term, but still got some pretty big supply and support in this 139 to 141 area. That would be the key support level that I'd be paying attention to. Amazon had a remarkable run over the past 2 weeks from 830 all the way up to almost 930, so almost a 100-point move in just a few days, or almost 2 weeks, and it's pulled off about 30 or so, 35 points off of these highs. Again, this has earnings, I think, at the end of April, but you can see already coming back in, getting a little reaction off that 8-period EMA as it pulls back about 20-30% from this move. Something to pay attention to. It's fast, it's pent up, it's high, it's a momentum stock, it's expensive, it's dangerous, all those things, but it's pulling back. So if you do want an aggressive entry in there, if you're looking for short-term tactical trades, pay attention to Amazon next week. Facebook. So Facebook here, getting a little bit tired perhaps. Again, it's held every time it's come back down to this 20-period moving average since this year. So all of this year, it's held in right at the spot and this general trend line. You can see it's just starting to weaken up here. Pay attention to earnings. If this does roll over, though, maybe you have some tactical shorting opportunity. It's always, it's definitely always paid to be looking on the upside, looking to buy dips in these types of names, all these names that we're looking at. So again, it's aggressive to try and short them, but it's out there if you're real tactical and nimble. Twitter, something we haven't talked about in a long time, is rolling over back to getting close to the all-time lows. Seems like it's only a matter of time before we come back down and retest the all-time lows here from May of 2016. That's just under $14. If you go down to the weekly time frame, you can see it's just been just slowly sort of melting lower here, and it'll be interesting to see how this reacts to the all-time lows. And then finally, Tesla, it's doing exactly what you want to see on a leadership sort of newly emerging breakout stock. Go to the monthly time frame again, you can see this nice consolidation that just got broken, that we just broke out of here just a few days ago, just a couple weeks ago. And as it resolved that higher, it's really not giving anything back. It's mostly consolidating through time, letting these fast-moving averages catch up. Multiple gaps now still unfilled to the downside. So very constructive action. It's, again, a tough one to chase, but if you want to be involved in it, it's one you seemingly have to chase at this point if you're going to try and play with Tesla. So that is the recap for this weekend. Thank you guys so much for watching. If you like the videos, please do subscribe. And until next time, talk to you then.